Silicon Valley Bank going bust last week made it for a terrible end of the week for Nasdaq, down more than 4.7%. New week is coming up. Consumer price index will come tomorrow. Will this be yet another red week? You're listening to the StockInvest.us podcast, Trading Tips with Jim. And for the next 30 minutes, you will know what I think will happen this week as more news is coming. And of course, you will have the trading tips at the very end. First, and as usual, a small jingle, and I will be back with the market section. Next week I'm off for holidays, and it may just be for the very best, because last week I did all the mistakes that I warned you not to do. I told you that I expected the week to start good, but was unsure about the end of the week because of different numbers coming out, and that would determine how the week would end. Anyone following the market knows that the end of the week was really bad. But I did, as I said in the trader section, I wanted to take a gamble. So for the huge profit we made in the meta trade, I used that profit to invest into 3 stocks, JD, NEO and Moon. And it all just became a huge disaster. Saved somewhat by the stop losses, but we will get back to that in the trading section. And it was not the job numbers that caused the markets to fall last week, because the job numbers came in a good direction for the stock market, meaning that the unemployment rate is going up. It went up from 3.4 to 3.6, something that the market needs in order to cool down the inflation. But it was a banking crisis. And that one will have an effect over this week. So Friday we had a major bank going over, the Silicon Valley Bank. During the weekend there was another bank, Silver or something if I'm not mistaken, also going over. And today before markets opened, the Feds said that they will guarantee for all the deposits in the major bank, trying to cool down the markets. And before going on the podcast, I saw that the futures were very green, but I don't think this will hold. We are settled for possible huge falls ahead, or we can have a short-term rally, simply because absolutely all buy signals are oversold. They are as low as they haven't been for a very long time, and when they are this low, there is usually a buying opportunity. But before going to the conclusion, let's look at some of the major things. So last week became a really bad week for Nasdaq, ending down 4.71% of 550 points down for Nasdaq. Now balancing on the 11,000 level, and also getting very close to the bottom of the trend channel for Nasdaq. Dow Jones had an equally bad week as well, down 4.44% for Dow Jones to 31,910 points. This week there will be again numbers coming in, and as you know, there is one number that we really want to follow, and that is inflation numbers, because we know these determine some of the market. When the job number came in as they did last week, where unemployment rate actually increased, market took it as a good sign and sent the 10-year treasury yield down from 3.96 to 3.69 over the week. So it was down, the 10-year treasury yield was down 7.32%. And you can see this across the board because the dollar is weakening against several other currencies, meaning that based on the job numbers, the market think that inflation is somewhat under control, because as people get unemployed, they cannot keep up their buying spree, and with less buying power, you should have less pressure on the inflation in general. This week we will get new numbers telling which direction we are going in, because on Tuesday, tomorrow, the CPI numbers will come in, consumer price index numbers will come in, expected to be 5.5 for February, and bringing the total inflation 12 months over 12 months down to 6%. It may very well be, if the numbers coming better, that for sure should give huge incentives for the markets to go green. Now, if this consumer price index gets in higher than expected, you should add that on top of the fear which already is in the market. So bad numbers tomorrow will for sure bring the markets down, while some good numbers can bring it up, meaning that everything indicates that tomorrow will be a volatile day. And it continues on Wednesday, where the producer prices year over year will come in, another number that people follow. Thursday will be job numbers. So again, a week with different numbers. Inflation is sticky, and it's more sticky than everyone thought. And over the last few weeks, Fed been moving a little bit back and forth. First saying that they think the peak is reached, and then changing their mind, saying that they might have to do a few more interest rate hikes. Now, in general, what can make the inflation go up? The continuous pressure on goods, meaning the buying power, of course, that is one thing. The other thing is the supply, and the real reason that we had the huge inflation that we had was not the spending, the government spending spree during COVID, where they just printed money like crazy, handing out in the East and West, causing it. It was also driven by logistic issues. Now we are in a situation where the conflict with China again is increasing, and China is a huge exporter of goods to Europe and US for sure. I see small articles where Chinese are tightening back up. Their economy is again growing after the opening for COVID, and they use a lot of the goods produced domestic. And they are tightening a little bit about their shipments, their export, and these things should have an effect on Europe. In general, it's the energy prices that often determines the inflation. And oil had a huge fall on Thursday, I think it was, when the job numbers came in. The oil sank a little bit back, but week over week, the oil only weakened $2. Currently trading at $77. Everything indicating that it will push up. And in a war scenario, where conflicts again are getting tighter and tighter, the Taiwan conflict, as I told you, is really brewing more and more. The conflict with China, oil should be under pressure. Gold had an increase last week. This is again related to the dollar weakening, because if interest rates go up, you will have more money you will have more return putting your money in the bank. Now, when the job numbers came in like they did, the 10-year treasury fell, and also the expectations for inflation fell, and that caused gold to go up $24 last week to $1,883. Good when you're invested in gold stocks and gold in general. Over the weekend, over this week, there will be a few earnings results, but none really major. If you're an IT geek, GitLab will have their numbers today. And tomorrow will be Lennar, and Wednesday will be Adobe, and Thursday will be Fed, and the rest of them are not very interesting in my opinion. But again, if you have any stock, make sure that you know if your stock is having quarter results released, because last week I told you I would go into J-Day knowing that they would have quarter results on Thursday, and anyone that followed J-Day knows that that was a disaster, causing for a very, very low opening on Friday, but we will get back to that very soon. Signals, buy and sell signals, is often a very good indicator of the situation in the market. And last week I told you they were somewhat low, but not low enough. They can always go lower. And due to the huge falls in the market last week, all signals that we analyze across every single stock, mostly worldwide, now shows that there is only 18% buy signals combined. This is very low. Last time we saw these kind of signals, it was huge buying opportunities. At the same time, I have to warn you that when numbers are this low, because if you look at Nasdaq, it's only 9% buy signals, down from 27 last week to 9% buy signals. There's hardly any buy signals in the market. This is usually an extreme good buying opportunity. When numbers are this low, you have to be warned, they can fall even further. We have seen that a few times over these 3 years doing this podcast, and I comment on this, that it is that situation where things can go very bad, very fast. I told you my personal belief is that Nasdaq has to go down to 8,000. That is where we will turn, that there will be 3 major falls signaling the end of the market. Hopefully that will not happen, but it's a statement that I still stands by. Buy signals being this low, Nasdaq 9%, indicates that there is a high probability that it will be a rebound, meaning that there should be short-term money made in the market. At the same time, you have to check support levels, because anything can push this into a frantic downwards rally where people will try to save the money. I have repeated this a few times, but I will do it in this podcast. As I said, I will go on holiday and there will be no podcast for the next 2 weeks. I will enjoy Sharm el-Sheikh, Egypt, goes to the pyramid, and also have Cairo Museum coming up. Many good things to look forward for coming up. Now, it may happen and it may not happen while I'm away, but just let me explain what is the typical end of the bear market. The typical end of the bear market is 3 major consecutive falls. I have been in the market for a very long time, seen this before. Market get into total panic, starts to sell, and positions get threatened, and people sell even more, and it just spins out of control. Very often it's news driven. Last time it was a bank, like we had now, causing that huge fall. And before that's been other news. Something triggering a market when it's in a fear, like now 9% buy signals tells me that the market is in huge fear. You get some bad news on top of this, and everything can just spin out of control. You get 3 huge falls where people throw in the cards one by one, and on these falls you usually see Nasdaq, for instance, going down 5 even more percent, and very usually they have to close trading for a few hours to try calm down the market. This is the most common way that the bear markets end, and on the very last fall, when everyone gives up, that extreme buying opportunity presents itself. I usually trade in these markets when it gets way oversold. I am buying like I did on Friday when markets were falling too much. I personally bought up quite much shares at the end of the day with the expectation that it will open green today, giving me some short percentages just over weekend. Now, again, also a small repetition here, but my personal belief is that the bull market will start in June. The bear market will end somewhere in May, will be that very last definitive bottom. But let's not hope that will happen. Let's hope that we are already in the bull market. That would be the very best thing. I'm just giving you a small heads up in terms of my previous knowledge of the market and how things have behaved previously. Now, if you go to New York Stock Exchange, only 9% as well for New York Stock Exchange. London 15, down from 30 last week to 15% buy signals. Tokyo remains somewhat good, down from 51 to 36, best of all of them, while Chess in China was down from 38 to 19% buy signals. All overall, looking at these numbers indicates a possible good buying opportunity. And as I've been stating all over for the last year or more, when we really focused on the 10-year treasury yield, I told you when it was 1 something that as this go up, the market will go down. Huge fall in the 10-year treasury yield last week is usually good for the market. But please be aware that as we speak, there are a lot of financial things going on with banks. And it may just escalate. So far, they claim to have somewhat control, but there is always something you do not see. And these news can be pushed out in the market during the week, causing very strong chain reactions. Hopefully, it will be not, but I will not be surprised if there is more banks. And just so you know, like Silicon Valley Bank, they were taking care of most of the huge money in the Silicon Valley itself. And this will have consequences for many of the companies in the Silicon Valley, which again represents a lot of the companies at Nasdaq. So there will be a lot of fear ongoing. We will not dwell much more about that. We will look at the chart because we will, as soon as we can, try to head towards the trading section and get a look on how it went last week. I love charts. I told you that you should as well. When you look at charts, it's so much easier for your brain to get an idea. Now, if you look at charts, and here again, I will have to almost praise major signals, because if you just rewind back, you heard me say that there was a major sell signal issued from the relation between the short and the long-term moving averages. Sometimes these are false, but in this case it turned out to be true. It was established by the end of February. Markets fell, then managed to bounce a little above the level, flipping signals a little bit, but then really had that huge fall last week. So these major signals, we saw it in January, around January 20th, there was a huge buy signals coming up from the relation between the short and the long-term moving average, held up all the way till end of January, giving a very nice profit for those following, more than 1,400 points of Nasdaq. Huge percentages there, and now, as I said, issuing a huge sell signal. How far down we will go? Hard to say, but we are really balancing on the levels where things can go even faster down. Breaking that upwards trend, it's not yet significant. Trends and calculating trends, and it's a little bit tricky. You shouldn't put too much effort into that small break of the trend yet, because it's not confirmed. Usually we like to say that to confirm a signal or a trend, you should have 3%, quite much there, but in general you should have a 3% break to confirm that it's an obvious break of the trend. You can have reactions, and this reaction, as I said, was driven by the bank collapse on Friday. So it doesn't necessarily reflect the market totally. You should, it's called noise in technical analysis, and you should take that into your account. Relative strength index was low last week. Everything was indicating that it should have a potential for an upside, but as we know, things went south. And the relative strength index is now 31, getting oversold, turning into oversold territory again. The problem now, however, is the following. Because the market fell, now there is starting to become a lot of resistance on the upside. That tells me that an upturn will have to be slow. You can have a short-term reaction up, like on a day notice or a few hours, which is strong, but in general, there is too much resistance above. So that good picture we had all the way till last week, where everything was moving in somewhat okay direction. You have the natural correction getting to the middle of the trend, starting to poise for an upturn, but then breaking down, leaving a lot of resistance above, and that resistance will be hard. So what about the downside? How does it look? There are some support, but as I warned you last week, if certain levels are broken, you can easily have a huge fall. The conclusion, how will it be this week? Well, if you look at all the numbers, there should be a natural reaction, but will it just be one day? Will it just be a few hours this morning before we are back into red? Or will it be a really green week? So hard to say. I'm going to vacation. I will not put up any trades for you in the trading section. And it is really hard to say. If to put a gamble on it, I would say it's 60-40, 60% for an upturn, while 40% for a downturn. The thing I'm pretty sure about is that it will be volatile. That huge potential for a downturn means that we can have an instant reaction down to previous low at 10,300. This thing can very, very well happen. Doesn't take much for it to happen. If we get back on track, we get to an upturn, we have an upturn reaction, you will go by step by 11,400, 11,600, it will go by 200 point step on Nasdaq. I'm pretty sure about that, like in a zigzag pattern, struggling on each, going a little up, then falling a little bit back and pushing up again. It will not be that easy ride. Sell signals from absolutely every indicator you can have. It will be a gamble. You have to make up your mind. Will you play the gamble, or will you stay reserved? All over, last repetition on this. As we've been in a bear market and still is in a bear market, I am very low in general, despite adding the profit from the meta trade into my trading portfolio last week. I still haven't used more than some 30% of my capital, which I have been reducing down from the very, very peak of Nasdaq. I've been reducing because we are in the bear market. I do not want to get overexposure and even go a little heavy last week. I was still only using profit from previous trades. I am far from fully invested in the market, and given the current situation, I will not invest more. I will slowly, however, increase, because at some point we will be a bottom, but will it be now or will it be 8,000? We will see at the end of the day. It is up to you to make a qualified decision how much you will gamble on the week. It will be volatile. Short trades can be made if you are the aggressive type. Let's move to the trading section. Look at how last week went. Look at some possible stocks that can do good this week before I'm heading off for holidays. We are in the trading section, or should I say the shame section, because last week was indeed just nothing but shamefully bad trading. As I told you, I went against my own advices. I didn't know for sure how the week would end, and it ended really bad, but still I was into 3 extra positions using the MetaTrade profit, that huge MetaTrade trade profit, investing into GDay, Neo and Mullen. But let's start on the very top, because for a long time we've been holding Sumerica. Sumerica have been jumping in and out of profit, but last week fell more than 8% on Friday, currently trading around 23 cents, I believe, down some 12% in the portfolio. As I told you over and over again, I think this will go to $1, and it's the one that we do not keep a stop loss on, because it's hugely volatile. We played it many times before. I believe there is a huge upside, and 23 cents should, in my opinion, just be a good buying opportunity. Then we had two stocks. We had one stock bought in week 7, one bought in week 9, both of them solid, which I said would be the anchors of the portfolio. We bought into war. As I told you, there is plenty of money to be made in war, and that will just continue. We bought Northrop 468.88 in week 7 on the Monday. Been going a little up, then a little down. Currently trading at $459.78, down 1.94%. And if we remember that Nasdaq was down 4.7% alone last week, we are very happy with that. As I told you, we have to try to reduce our losses, and this is how we do it. I bought Chevron week 9 at 162.15 because I told you I think oil is heading for an upturn, and if markets go down, these were my exact words, if markets go down, I think stocks like Northrop and Chevron will hold good. We bought Northrop 162.15 week 9, currently trading at 159.67, down 1.53% since we bought it, holding very, very good. Again, then last week I said that that huge profit we had from the meta trade, that very, very strong profit, I took that profit, put it in the bank, and last week I said, okay, I will just use that profit. Now, get a little meat on the bone. Try to understand. When Nasdaq was more than 16,000 points, I told you now I'm just selling out huge parts of my stock because I believe there will be a huge correction at bear market. I was selling down all my positions bit by bit down to some 30%, and been playing that over. Last year doing strong profits, extremely very good profits, with these 30% growing and growing. But still, I never used of additional money. I think it was 1 or 2 weeks where I added a little, going up from that very low 30% to around 36-7% I'm invested into the stock markets now. So when we had that huge meta profit, I took the profit, put it in the bank, and said that I would play it later. I did that last week against better knowledge. I thought I would put into some risk because market could really go both ways, but it went the bad way, went totally south. Now I bought JD on the Monday for 47.44. It was not the lowest, but okay price. Went a little up, then started to fall. Cut by stop loss 46.29, down 2.42%. I got NEO on Monday on 9.38, and as I told you, I think NEO at these levels are very good, but NEO could not hold the bad markets. Cut by stop loss at 8.92, giving 4.9% loss. And to make matters even worse, I got into Mullen at 23 cents on the Monday. I think it was up to 24, then started to fall, was cut by stop loss at 21 cents, giving 8.7%. So the 3 stocks I bought for the meta profit, well, they fell in line with the market. So I scalped off 5% from the meta profit in just stupid trades last week. So all 3 of these are solds. The other 3 remain open. As I told you, I'm heading for vacation. I will enjoy 2 nice weeks in Sharm el-Sheikh, Egypt. I will go to the pyramids and I will enjoy Cairo Museum, among other things. And since I will be away, I will not give trading tips for this portfolio. I have much more stocks than what you see here. This is just a portfolio I created so you can follow my trades and you can see exactly how I do it. Maybe learn from my mistakes and learn when I do good things. As I told you, one way to really up your gains, you heard me say this for 3 years, buy on red days, sell on green. And of course, when market fell very hard on Friday, I used the chance to get into several extra positions, which I will sell early today and just take the profit. Will not go greedy. So that is one of the best tips I still can give. Buy on red days, sell on green days. But being away for 2 weeks, I will not put up portfolio tips this week because I cannot follow up next week or the week after, as I will be fully gone for 2 podcasts forward. But at StockInvest, we created an AI podcast covering the same topics, many of the same topics, and even more than what I cover in the podcast. So tune into that one while I'm away. Get your info, and I will be back in a little over 2 weeks. But what are the trades that you can make? So here are some tips. First off, I believe it will be very volatile week. I believe it will be a lot up and down, and in worst case, it just gets into a very, very bad mood. One way that you can trade the market is going to short positions. I usually do not talk about these things because it is for more professionals. It's a very easy way to do. But if you think, like I said, I think there is 60-40% chance for an upside, meaning there is, in my opinion, based on the signals, etc., 60% chance for an upside, but still that huge 40% for a downside. You can put a few shorts that will, if market goes south, will give you profit while you still play the upside on other stocks. It's a way of balancing your portfolio, doing strategies. And if you are placing some bets, and these are covered by stop loss, so they will be cut by stop loss while your short positions continue to grow. But do not go into shorts into volatile stocks. This is the one way to really lose money if you're doing it, going to safe stocks, big stocks, because there is no chance that Apple will double overnight, or Tesla or Microsoft will double overnight. It will not happen. On the other hand, this can happen on low liquidity stocks or very volatile stocks, and then you are really stuck if you are in a short position. So a short should only be into solid stocks, and you should be happy by any loss or any downturn that will turn into profits. It's a secure way. And if things go the other way, that market ticks up, not down, these heavy stocks will not move as much. So your upside is covered while you still have that opportunity for downside. Now, if you do not play shorts, but only buy and sell stocks, I would personally, as I recommended over and over again for many, many weeks now, I would go for low relative strength index with strong support below. At StockInvest.us, you will find very beautiful charts. We made very beautiful charts for you. And on the right-hand side, you will find some gray bars. This is accumulated volume telling how many stocks were bought and sold at current levels. This is a really nice way to see support levels. Easy to see it, how it plays out. Find stocks, solid stocks, which have good support below from these accumulated bars, and somewhat little resistance above. Oversold just means that the stock is oversold and should have a reaction up. The only thing that will break the upturn is, of course, huge resistance above, or if markets really turn bad, then it doesn't matter. So that for sure is the best tips I can do. You can go to StockInvest, find the RSI list, and look at stocks yourself. Everything indicates that Tesla might do good in the first few days of this week. And of course, many stocks are oversold with a potential upturn. Don't get greedy, because that is one way that will for sure make you fall. I expect volatile week, meaning that a stock can move up 5% today and down 6% tomorrow. Now, I sometimes get questions. Now, this relative strength index, these pivot points are, by the way, significant tops and bottoms. When they occur, they are colored in the chart as green circles if it's a buy pivot, or a red circle if it's a sell signal. These are very good, but they are not 100% perfect. No signal, no indicator, no trend can hold market news like Friday. They break all indicators, everything. Indicators and signal will just give you a general idea. It works in most cases. That is why I emphasize over and over again, use stop losses. You will see that sometimes your trades are cut. You have to take a loss just to see that the stock bounces up. But do it over 20 trades and you will see what I mean. Same thing with pivot bottom, same thing with trends. in general, they are significant. They work in a bigger perspective. Look at 10-20 stocks, follow 20 stocks in a rising trend. You have a much higher chance than buying anything in a downward trend or a horizontal trend. It is just how it works. Use relative strength index to find good buying positions. Look at accumulated resistance and accumulated support for better timing of your buy and sell. As I said, I am off for 2 weeks of vacation. There will be no podcast for the next 2 weeks. When I get back, it's time to try to change the concept of this podcast, try to make it a little bit more interesting. I hope maybe some of you listening to this podcast or watching out on YouTube will reach out, take contact, because I would love to speak to some of you about your trades. You don't have to be on camera and at all, and you can be anonymous, but it would be very nice to hear some of your stories. How did it go over the last 3 years? Where did you make money? Where did you lose money? And where are you now? And if you have any general tips, tricks, and ideas, because I believe we are heading towards a huge upturn. We just have to finish this bear market. And when the upturn comes, money will be made. While I'm away enjoying the sun, I hope you will have a super duper week this week, next week, that you will bank in tons of greens and make very, very good trades. I will be back, as I said. And until then, I can only wish you the very best. Bye.
Welcome to StockInvest.us podcast. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.us. By using the information provided,